In the highly volatile world of trading, especially in Forex and scalping, nothing is more painful than watching a loss grow uncontrollably. And the main reason, failing to cut losses at the right time or even neglecting to place a stop loss from the start. Many traders harbor the mistaken belief that the market will turn around, that a deep dip is only temporary, only to see losses accumulate gradually, far exceeding the account's tolerance. Not cutting losses is not just a technical mistake, it is a serious psychological flaw. Greed and fear constantly battle in a trader's mind, causing them to delay the decision to let go at the appropriate moment. In scalping, where every second counts, such hesitation can turn an account into ashes in the blink of an eye. But why do traders fail to do what seems so simple? And what are the real consequences of not cutting losses? Join me as we delve into the confessions of traders who have made this mistake to gain deeper insight. The next part will reveal the hidden truths few dare to admit. Confessions of weaknesses in trading, when not cutting losses is digging your own grave. Did you know that on the trading journey, failing to cut losses at the right time is one of the most common, yet most dangerous mistakes? It not only costs you money but also devastates your psychology, weakens your decision-making ability, and can even kill your trading career. The crux of the problem lies in the battle between logic and emotion. When your trade moves against your prediction, it's easy to fall into panic or stubbornness. You start doubting your system or, worse, believe that a retracement wave will rescue you from losses. So, you hold on without placing a stop loss or hesitate to exit at the right moment. This is a double-edged sword stabbing directly into your account. In Forex, extreme volatility makes risk management a matter of survival. You cannot allow a few pips going against you to make you lose control. A stop loss is the tool that freezes your loss at a fixed level, preventing losses from spreading. But if you don't set it or fail to stick to your stop loss discipline, you are letting the market devour your account little by little. With scalping, a high-intensity trading style, where positions are held for minutes or even seconds, lack of discipline in cutting losses makes the consequences even more unpredictable. A small reversal can burn your entire account, or prolonged losses can lead to stress, psychological exhaustion, and impulsive decisions. The best scalpers are those who can cut losses quickly, identify clear risk-reward levels, and strictly follow their rules. Moreover, the psychological trap of hoping the market will turn around is a subtle yet dangerous snare. The market operates based on money flow, news, and supply demand, not your personal wishes. If you cling to greed and vague hopes, you will sink deeper into losses. Market shocks, unexpected news, or strong volatility can wipe you out in the blink of an eye. I have witnessed traders with small accounts, starting with just a few $100s, who, by not cutting losses on time, lost their entire capital after only a few adverse reversals. They fell into despair, lost faith, and some even quit trading altogether due to heavy losses and immense psychological pressure. What's more painful is that not everyone learns this lesson quickly. Some keep clinging to hope, losing more and more, becoming increasingly irrational. They unknowingly become victims of negative emotions such as fear, greed, and pride. But don't despair. Recognizing your weakness is the first step to victory. Identifying and admitting the disease of not cutting losses is the key to building discipline and developing effective risk management strategies. Stop loss is not your enemy. It is your ally that helps you survive long-term in the market. So, how do you overcome this psychological trap? How do you become a disciplined trader who controls risk methodically? In the next section, I will share practical strategies and advanced risk management tips every trader needs to know to avoid repeating the no stop loss mistake. Part 3. Risk Management and Discipline. The golden key to escaping the no stop loss trap. After identifying the dangers and consequences of not cutting losses on time, the crucial question arises: how can you change this habit, build discipline, and manage risk effectively in Forex and scalping? Understand the role of stop loss. It's not the enemy. Stop loss is the guardian of your account, a red line that must never be crossed in any trade. Setting a stop loss is not surrendering to losses, but a capital protection strategy that helps you survive and have the opportunity to return to the market. Every losing pip is a lesson, but a controlled loss is acceptable. You cannot win every trade, but you must win the overall game. Determine a reasonable stop loss level based on strategy and technical analysis. Random or overly wide stop loss placements cause unnecessary large losses. Instead, base your stop loss on support and resistance levels. Average true range ATR volatility zones, or other technical signals to define a reasonable exit point. For example, in scalping, stop losses are usually very tight, just a few pips to minimize risk per trade. Use clear risk-reward ratios, favoring profits 2 to 3 times larger than risks. A golden rule in trading is that every trade should have a well-defined risk-to-reward ratio. For instance, if you accept risking 10 pips, your profit target should be at least 20 to 30 pips. This balance helps maintain consistent profitability even if some trades result in losses. Create a detailed trading plan and strictly follow discipline. Successful traders always start their trading day with a clear plan, selecting currency pairs, defining entry points, stop loss, take profit levels, and appropriate position sizing. The key is to strictly adhere to this plan, without letting emotions cause you to move your stop loss or hold losing trades longer than planned. Train your psychology to avoid the emotional trap. Psychology is the biggest enemy of traders. Fear leads to closing trades prematurely before profit targets are reached, while greed causes holding losing trades too long and reluctance to cut losses. You need to cultivate calmness, accept risk as an unavoidable part, and recognize when to let go. Practical ways to build this mindset include establishing clear trading rules and following them, reminding yourself that losses are lessons, not disasters, limiting constant chart watching after entering trades to avoid impulsive reactions, practicing demo trading to improve reflexes and confidence. Preserve capital and manage position size appropriately. Never risk more than 1 to 2% of your capital on a single trade. This basic rule is often overlooked. Trading with excessive position size without timely stop loss can cause your account to blow up from a small adverse move. Good capital management is your shield against large losses. Learn from failures and adjust your strategy. Mistakes are not inherently bad if you learn from them. Each timely stop loss helps you understand your weaknesses and flaws in your strategy. Keeping a detailed trading journal, conducting thorough reviews, and being willing to adjust your approach are crucial for sustainable progress. Not cutting losses on time is an unacceptable mistake in professional trading, but also a valuable lesson if you dare to acknowledge and change it. When you build discipline and serious risk management, you not only protect your account, but open the door to long-term success. In the next part, I will share real-life stories and invaluable lessons from traders who fell into the no spiral and how they recovered to come back stronger. You will see that failure is not the end, but the beginning of a hopeful new journey. Part 4. Valuable lessons and a call for change from traders who have stumbled on the trading journey. Many traders have paid a heavy price for the mistake of not cutting losses on time, but what sets them apart is not their failure, but how they got back up afterward. Story 1. A young trader's hard lesson from an account blow-up. I once knew a young trader, full of passion for Forex and scalping, who poured his entire small capital into a trade without setting a stop loss, hoping the market would reverse. But the storm showed no mercy. Within minutes, his account nearly evaporated. Despair, loss, and regret brought him to a crossroads. Quit or learn to start over. Fortunately, he chose the latter path. He started from scratch, rebuilt his knowledge, disciplined himself to set strict stop losses, and strictly adhered to risk management. After some time, he not only recovered but became a much more disciplined and successful trader. Story 2. Experienced scalper's mindset shift from the darkest hour. An experienced scalper once lost control by holding on to losing trades, hoping to break even. Ultimately, he realized that failing to cut losses on time only deepened his drawdown. The greatest lesson he learned was, losses are normal, but don't let them exceed your limits. He adopted automatic stop-loss orders and committed to rigorous discipline. Since then, his mindset stabilized, his trading became more effective, and he endured over the long run. A call to you: don't let emotions control the game. Trading is not for those lacking discipline or unwilling to learn from mistakes. If you find yourself struggling with not cutting losses on time, pause and reflect. Are you letting emotions override logic? The market doesn't care about your feelings. It only responds to money flow and news. Cutting losses timely is the only way to preserve capital, protect yourself from large drawdowns, and maintain the strength to seize future opportunities. See the stop loss as a shield protecting you, not a sign of failure. Learning to accept controlled losses is the first step toward becoming a professional, sustainable trader. Conclusion. The journey to success begins with change within you. Cutting losses on time can be a double-edged sword that inflicts devastating damage. But with discipline, strict risk management, and a strong mindset, you can turn losses into valuable lessons. Trading is a long journey, not a sprint. Focus on maintaining mental resilience, building discipline, and being ready to learn every day. When you do that, success will no longer be a distant dream. Hello everyone. First of all, I want to express my deepest gratitude to all of you who have taken the time to follow this channel, watch each video, and accompany me on this journey of learning about trading, investing, and risk management. Your support, interest, and positive feedback have been a tremendous source of motivation, encouraging me to continue sharing valuable knowledge, practical lessons, and inspiring stories in this ever-changing world of finance. Trading is never an easy path. It requires persistence, discipline, and continuous learning. There will be times of failure and losses, but the most important thing is that we know how to get back up. learn from our mistakes, and keep moving forward. I hope that every video on this channel is not just dry information but a source of motivation, a companion helping you maintain a strong mindset, build the right attitude, and develop risk management skills in Forex, stock markets, or scalping. You find the content on this channel helpful? Please don't forget to hit the subscribe button and turn on the notification bell so you won't miss any new videos. Every subscription, like, and comment helps the channel grow, allowing me to invest more time and effort into delivering even higher quality, in-depth content. More importantly, I look forward to hearing your feedback, questions, or topics you'd like me to analyze in upcoming videos. Please leave your comments below each video. Subscribing also means joining a community of like-minded traders and investors, where we can learn from, share with, and support each other through the challenges of the financial journey. I firmly believe that with determination and the right knowledge, success in trading is no longer a distant dream. Finally, thank you once again for your trust and companionship. Let's build a professional, respectful, and inspiring trading community together. Together, we will not only learn how to prevent risks and cut losses on time, but also how to seize opportunities to achieve our financial goals. Wishing you all success, steadfastness, and confidence on your trading journey. See you in the next videos.